Today is May 15th, and this segment's going to be an update on what the new repayment assistance program looks like, along with we are going to talk a little bit more about borrower defense, just because we're being flooded with borrower defense inquiries, okay, here at LoanSense. So I just want to address a little bit about borrower defense. The number of schools on the sweep versus Cardona list has grown to over 150 schools now. And so we're going to list those schools at the bottom of this video and list a link if you want a complimentary borrower defense consultation. It's a quick consultation to see if you're a good candidate. I did also have a comment in an earlier video if we could provide templates to borrower defense. I don't think people understand the application is like 25 pages long. It's 25 or 27. It's very long. And there's a lot of evidence that people have to support and to submit on their own case. So no template can be provided. It's truly individualistic to submit a strong application. So I'm going to go through borrower defense a little at the end of this video. But first, let me start with what is being revealed about this new repayment program. Okay. I'm going to pull up. I'm not going to share the screen. I'm just going to talk through what some of my notes are on the finding. First of all, when people come out of school, or whether they graduate or not, they're put into a standard plan, right? And that standard plan is 10 years, okay? But now the new standard plan is going to be a window between 10 to 25 years, depending on the amount of debt, okay? So, and it's going to be equal payments throughout the term, whether it's 10 or 25 years. So a borrower who has less than $25,000 will enter automatically into a 10-year repayment plan. If they owe between 25 to 50, they will expand it to 15 years. And if a borrower owes between 50 and 100, they'll expand the repayment plan to 20 years. And if you owe over 100, they'll expand it to 25 years, okay? So the idea now is that the standard plan will just automatically be extended based on the amount of debt. So right now, if people took 150 grand from grad school, they come out, the standard plan is still 10 years. That makes their payment really, really high. And that's why people go into income-driven plans, because those 10-year plans are just simply unaffordable, right? So that's a proposed change to the standard plan. And right now, how it works is people get into 10, and if they have a consolidated repayment, it can expand to 30. So now let's go over the repayment assistance plan, okay? So right now, that what's being proposed is the repayment assistance plan. The one aspect I do like about it is that it doesn't increase the balance year over year like prior plans to save did. But what I don't like about it is they extended payback to 30 years instead of 20 to 25. Automatically, anybody who enters repayment assistance goes and pays for 30 years, which to me is crazy, because because 30 years is really, in my opinion, way too long to pay for your education. And also, another thing I don't like about it is that if you enter into the repayment assistance program, you can't leave it. It's like you're in it, that's the plan you're in, okay? So that's another downfall about the program. But there are a few good things. Balance does not increase. So if, let's say your payment is supposed to be 500 and the repayment assistance program says you can afford 200, well, then that $300 is not going to be added to your balance for the end of the year or the end of the repayment term. It will literally get nixed. That $300 will be forgiven month over month so that the balance doesn't grow. And the $200 you're paying will automatically go to the principal, so that, and whatever you don't pay will automatically be forgiven month over month. So there's no accumulation of balance, because what's demoralizing is people pay for years and years and years and be like, now I owe more money than when I started, which is very demoralizing. Nobody likes that. They want to nix that part. A big part of the program as well is that it's going to be based on the adjusted gross income, which people have on their tax return. So if somebody earns $10,000 or less, the minimum payment is $10 a month. And if you earn between 10,000 to 20, the payment will be based on 1% of the adjusted gross income. If you earn between 20 to 30, it'll be 2% of your adjusted gross income. And as your income scales, it goes up to 10% of the adjusted gross income. So anybody earning over 100,000 will pay 10% of their adjusted gross income towards their student loan. So still affordable, and they do reduce the amount for people that earn less. Here's a big difference. There is no $0 payment though. There's only a $10 payment, which they say that it will likely prevent people from going into default, because it's not like you had a $0 payment anyway. So you don't know the difference if that zero is counted towards a payment or not counted as a payment. And that's how people that get zero end up in default, even though they were in zero. They just didn't continue to file and certify their income. So they lost the privilege of a zero payment versus a zero payment and then go into default. Doesn't make any sense, right? So they're saying we're going to stop that, because people will minimum have a $10 payment, and they know if they're in repayment or not because they have at least that $10 coming out of their bank account, right? So that's a big key feature. Whereas Save, if you earned under 65,000 as a family of four, your payment would be zero. So that is no longer going to exist. But the biggest part is, and of course, there's activists coming out and saying, well, if you pay $10 a month, $120 a year, that could be significant if you don't earn that much money. But I mean, if you went to school, the Republicans are saying if you went to school and you have some form of education, even if you earn less for whatever the circumstances, then a $10 payment, they believe it will help prevent default, which we'll see. It's a theory. We don't know yet because we've never activated any of these plans, but this is what's being discussed right now, right? And then, of course, the biggest feature is that any payment you have will go 100% towards the principal. If there's leftover interest, fine, but no accumulating balance will happen, which I believe is a really, really important key feature. I can't find anything about the filing separate rules yet. I haven't read anything about that. So as soon as we hear about that, I'll update you. But basically, every single person that takes out loans after the middle of 2026 will have to enter into these new payment programs. So everybody who already has loans are not going to be subjected to these new programs, but everybody who borrows their first loan after the middle of 2026 will be subjected to these new programs. Okay. So I just wanted to clarify that. The forgiveness is like a monthly drip instead of waiting till the end, which they believe is a really important feature of the repayment assistance program. It's like a monthly forgiveness instead of a one lump sum at the end. So they believe that that's a really important feature. And so July of 2026, everybody will have to be enrolled in these plans. And so anyone who is currently has debt will have income-based repayment, which is 15% of the discretionary income, but the repayment windows are shorter. If your PSLF obviously goes down to 10 years, but your payment will technically be higher, especially if you're a lower earner than under this new repayment program. But the new repayment program is extended such. So if you're a higher earner, the newer program repayment assistance is not that great, because by the time you pay for 30 years, you're likely going to pay your balance off. And that's a key feature that I think the Republicans like, because they want you to pay it off. And if you really need that assistance and you're lower earner, you can still get it, but you're going to be on the hook for 30 years. So that's a bit of a difference between the programs. Now that I've broken down the programs, let's talk a little bit about bar defense, since we're getting so many calls. So again, links will be below. We're going to list all the Sweet versus Cardona schools. It's quite a long list, so I'm not going to go through every single one of them on this video, but there's very famous ones like ITT, Walden University. There's quite a large for-profit online schools that are part of the Sweet versus Cardona list, but there's 150 of them. So again, I'm not going to go through them. The application, if you have not taken a look, it is a pretty extensive application, and it's really important that people gather evidence for this application to submit a strong application. There's an entire studentaid.gov site on how to submit a strong application. LoanSense has a database now of public evidence we can help borrowers submit. So if you have a hard time getting your transcript, that's of course the most important piece of evidence, is that you attended the school, obviously, that your debt is as a result of attending that school. And then there's some public evidence we can get, and we can help borrowers get additional public evidence. But really strong applications, borrowers have their own private communications they had with the school, promising, various internship opportunities or promising specific skill development in internships that they never received, or specific types of courses. So having evidence that you took those courses, what was promised, and then you could state if you received it or not, those items make a strong application. I did have somebody ask if we could give templates, pre-filled templates, a bar defense. That is impossible because, number one, the reason why people file bar defense, there's 6 different reasons, and the application has to be based on your reason and based on your evidence. So it's impossible to give templates, pre-filled templates. That's impossible. You can't submit a strong application based on a pre-filled template. Okay. I'm opening up the studentaid.gov site right now on borrower defense. I do want to say though that borrower defense was something that was brought into effect not under Trump's administration. And although it's not the topic of consideration or topic of conversation in the current legislation, that there is limited time, there's limited funding. It takes 1 to 3 years to get the discharge. But if the Department of Ed takes over the specified time, you automatically get the discharge. So if you attended the schools, it doesn't hurt to put in an application if you have not been paying for enough time to get the loans forgiven. If you've attended one of the 150 schools, the likelihood with even public evidence that your application can get submitted is a good chance. So we encourage people to do it sooner rather than later, because it has not been legislated, has not been added to the legislation that I know of or have seen yet. So the timing and funding for this may be limited. We don't know when it will end. Things can change. So we encourage people who have attended the 150 schools to, especially if they didn't get the outcomes promised, to possibly apply. Again, I'm not trying to say it's absolutely true. We need to make sure you have the what's required to submit a strong application, because it's a pretty arduous application. I'm not saying everybody apply point blank that attended these schools. I'm not saying that. If you had decent outcomes and you liked your experience, I'm not saying that you should, but if you didn't have a great experience, you did not get the promised outcome, and they're on the Sweet versus Cardona list of 150 schools, then you should consider applying. Why not, right? Especially if you have, like, let's say 8, 7 more years left to pay. It doesn't hurt to apply and get in the queue for consideration, because again, if they don't respond in time, your debt is automatically discharged. So it's a great opportunity. Again, I'm going to link to our complimentary 15-minute consult to see if you're a candidate. And I'm also going to include the 150 schools below. What are the other main questions we're getting about bar defense? And I do want to talk about a few things of how we help people with bar defense. Number one, you can turn over and let us assist you file and complete the entire application. Or if you want to do it yourself, we do have a review product where one of our reviewers can just take a look at it and give you a couple reviews for a lower price. We'll do a couple reviews. We won't write the application. We won't help you in assisted you in writing it, but we'll review the application to give you pointers on how the application can be strengthened. So those are the couple things we're doing right now with bar defense, just because there has just been a flood of inquiries around the programs and people learning about their schools being added to the list. So again, take a look at the bar defense list below. That's included. Schedule 15 minutes if your school is on the list. And by the way, if your school is not on the list, it's not that you don't qualify. It's that the application review period stretches now to up to 3 years. And it's just up to 3 years, a little longer. And obviously you have to have some pretty strong claims. And the claims, by the way, that are being submitted from schools that weren't on the list is the reason schools, I believe, are getting added to the list. So because an overwhelming number of people are submitting claims against those schools. So by the way, just because you decide not to work in the career field that you studied is not an automatic good reason to apply to bar defense, especially if they're not on the list. Some people will call and be like, well, I didn't get a job in this field, so and they're, you know, a pretty reputable nonprofit school. Can I file bar defense? And it's like, we're not trying to say no. We don't know what the experience was. They could have used aggressive and abusive recruiting tactics. There's criteria, right? Which I have a video, by the way, where I talk about the criteria for bar defense. So if you haven't checked that out, please do check that out. I'll try to link it. I have to go find it, but we'll try to link it. But I'm not going to go through all that content. But if you did experience that, even at a reputable school or one that's not online, I'm not trying to say that you shouldn't apply to bar defense. But just because a person doesn't take a career in a specific field is not a strong enough reason to apply to bar defense. It has to literally be due to a lie, a fraud, or action or inaction by the school in addition to not getting the career outcome. So there are criterias. Again, we go over all of this in our consult. And of course, at LoanSense, we can help you enroll into income-driven plans while you're applying for bar defense. Just know that if you're applying to bar defense and they pause your student loan payments, that can impact your ability to get a mortgage. So we can go through all of that if that's your scenario. But just know that there are other options besides bar defense. Even if bar defense isn't the right option for you, LoanSense can help with income-driven public service loan forgiveness and just help you with overall decisions on how to best manage your student loan debt. I hope that was helpful. Comment, like, subscribe, share, and we will see you on next week's video.